Hi everyone, please check the pinned comment and let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bullish scenario, where we're looking at a finished three-wave structure ABC regular flat for now continuation to the upside and new highs to come. In this scenario, wave C reached the most common target area for a regular flat, and also wave C ended below the low of wave A, which is what you want to see. But the main issue here is this wave B, as wave B by itself is a flat structure, and a flat structure wave B in a bigger ABC flat reduces the probabilities of a flat scenario, as this is not really something you want to see, and it is incredibly rare. So therefore the probabilities of the scenario go down. Now in this bullish scenario, if this is the low and we are looking for impulsive structures to the upside for a new high, the remaining structure we have to look for is an expanding diagonal, which by itself is also a rare structure, as any expanding structure in general is a more rare structure. Reason being, a normal impulsive structure without overlap between 1 and 4 is already invalidated over here because we have overlap between 1 and 4. That's not what you want to see in a regular impulse. A contracting diagonal is also invalidated. 3 is longer than 1, and also over here price dip too deep. And a double 1-2 is also invalidated, as the second wave 1 is longer than the first and the second wave 2 is longer than the first as well. So what remains is this expanding structure. So now we then have a 1, 2, 3, 4, and you'll be looking for a wave 5 to the upside. Now what you want to see is each impulsive structure has to be longer than the previous structure. So wave 3 longer than wave 1, that is the case. Potential wave 5 to the upside longer than wave 3. So you want to at least hit the 1-to-1 over here, taken from the low to the high of 3 to the current low price has over here, which is sitting at 29.1k, with usually a maximum target, the 1.618 at 30.8k. Couple of resistance areas in this area, additional resistance, 29.1, 29.4, 29.7 to 29.8, and 30.4 to 30.6. Now you also see for wave 2 and 4 a couple of fibs. Common target areas for expanding diagonals wave 2 and 4s is the golden pocket, 786 and the 886 Fibonacci levels. The 05 here for wave 2 has been hit, but as you can see it missed out on hitting the common target, being the golden pocket. And in wave 4 the 786 has been hit, and that at least is a common target area for a wave 4. Now the invalidation of this scenario is price hitting this low over here, as then wave 4 goes deeper than wave 2, and that is not what you want to see. In general, again, an expanding structure has lower probabilities. If we then go back to the medium time frame, then the bearish scenario on the medium time frame is a zigzag ABC to the downside, a 5-3-5 wave structure, with the most common target for wave C being between the 1 and the 1.236, which is between 22k and 20.5k. And we do have some additional support in this area over here. You can see I have a target box sitting just around the 1-to-1 between 21.8, 22.6, and also around the 1.236 between 20.2 and 20.6k. Now in this particular scenario, we expect the double bottom over here to be hit, which is like a magnet for price anyway. And also this low over here has been taken on Bybit, but as you can see, not on my chart as well as many other charts. And the fact that this low has been taken on Bybit increases the probabilities that other charts will follow. Also, Bybit has quite a big wick to 23.6k, and based on historical data, it is very common for price to eventually fill the wick to at least 23.6k. Now, if we zoom into this scenario and look for bearish structures to the upside, then of course, because the bullish scenarios are quite difficult to find and are not high probable on the lower time frame here, it increases the probabilities of the bearish scenario. So in this scenario, we have either an ABC that is finished, 1 to the 1.236 has been hit, looking for a move down, or we have a WXY with a flattened W, X double zigzag, and then a zigzag in wave Y, where still you expect higher prices to 29k, before a move to the downside. If we then zoom into this structure over here, then the bullish scenario is an ABC structure or a WXY structure. It doesn't really matter for the count, as the target area is very, very similar. So in this scenario, you are looking for a three-wave structure to the downside, and then you want to see continuation towards the upside. Now, what is important here, however, is the volume. So if we look at the volume, then currently the low has been made on the highest volume in the local trend towards the downside. You can see price moving to the downside more and more impulsively, while volume is moving to the upside. So therefore the probabilities at the moment are not on the side of a bounce and a move back towards the upside. The probabilities will only start to increase if price can actually manage to get above this resistance area over here, which it rejected from. So on the chart, it bounced on the monthly naked point of control, 26.6k, moved towards the upside over here, hit resistance that it first dumped through over here. It hit the resistance, including some bearish CVD divergences, but you really want price to move above resistance, maybe retest over here, create some bullish CVD divergences or whatever you are looking for, and then you want to see it move back towards the upside. As long as you're below resistance over here, probabilities are not great for a move towards the upside. For a wave C, however, what you also want to see is preferably another low on lower volume, because now this move, if we are thinking about an ABC, which is a 535, then in an ABC, a wave C being a 5-wave structure, usually wave 3 has the highest volume to the downside, and then you make another wave 5, so a lower low on lower volume. So preferably for a wave C, you're going to make another low, but this time on lower volume, and that is something we have to keep in mind. If price does move to the downside, then the support area over here is between 26.2, 26.3, next support area 25.7, 25.9, and then you get to the higher time frame support areas, which is the double bottom, 24.750, and then you already get to 21.8, 22.6. Now, if we then look at the CVD divergences, then over here you do see we have some, like, let's say bullish CVD divergences, higher low in price, lower low on the CVD. So that is a bullish CVD divergence, but the local CVDs have priority, always have priority. So over here more locally, what we see is we had a bit of a bullish CVD divergence over here after the bounce. Now that one played out, this price moved to the upside, and here we do have a potential visible bearish CVD. Now the bearish CVD is with a pivot on the left and the right of the most recent low. Preferably you look for CVD divergences on the right side of the newest low. So as you can see, that is not ideal. And if we zoom in at the moment as to what is happening on the right side of the most recent low, then over here you can see higher low in price, lower low on blue, so bullish CVD divergences. And here more locally, nothing is going on at the moment, but you do see on yellow those bearish CVD divergences, lower high on price, higher high on CVD. So that could be absorption of market longs and a push towards the downside. So keep an eye on this, preferably though, of course, keep an eye on CVDs on the right side of the new low. But in a strong trending environment, it is important to keep an eye on these CVDs as well. Now we do have news coming up later today. We have news over here on Thursday. Let me quickly refresh. 2:30 p.m. Central European time. So that might increase the volatility. So make sure you trade safe around these hours. And if we then look at the probabilities of the different scenarios, then currently, well, as explained, on the medium time frame, probabilities are higher for a move down. On the low time frame as well, for eventually either WXY and down or ABC and already going down. On the micro at the moment, well, as long as we are in a downtrend and as long as we see bearish CVDs, the probabilities are higher for continuation down. But if it can flip the resistance where it is at the moment and it can flip it to support with maybe some bullish CVDs, that is the moment where I might be okay. We might be looking for a bit of a move towards the upside. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.